I know one of my main questions in my 20s and now my 30s is how do I invest my money? What does that look like? Like, what do I even do with it? So today we're going to ask Dad, how do I invest?
Okay, well, the first question I would ask someone is, why are you investing? What is the purpose of the money? What is the goal? Once you know a goal, you typically would apply a timeline to the goal. So if the goal is to buy a house in 3 years, there you have a goal and a timeline. If the goal is for retirement and you're, 32 years old, then retirement is at least 25, 30 years away. So you've got a much longer timeline. That's important because how you invest, how you should invest, is based in large part upon how much time you have. The reason is that the stock market, which is typically gives about the best returns you can get long term, it also goes through wild gyrations at times. It can go down 30%, it can go down 50%. So you need a good 5 or 10 years to be in the stock market. If you don't have that kind of a timeline, you shouldn't be in the stock market. And that would go for kids' money for college. A 17-year-old kid, you need to be much more conservative investing because you only have a year. Can't afford to have a
Mm,
50% market drop just before the child goes to college,
right.
and now you don't have the money. So once you know what you're investing for, if it's a short-term thing, again, like to buy a house, then you're going to be looking at things like just bank accounts, money market accounts, high yield bank accounts.
What's a money market account?
Money market account is very, very similar to a bank account, but it's actually a mutual fund that generates interest. So it's typically higher interest than you can get in a bank account,
And you can easily,
and it's as liquid as a bank account.
oh,
There is the very small potential of a loss there in a crazy situation. Like in 2008, we had some money market accounts that went from $1. They're always $1 a share. They went from $1 a share to some lower number than that. So people actually did have
hmm.
losses on it. Short of that, there's really never been a money market problem. So they're treated like bank accounts in terms of short-term savings. Certificates of deposit are another type of instrument you can use for, 6 month to 5 year investing.
Hmm.
They are guaranteed by the United States government up to $250,000. So even if you buy it from a bank and the bank goes under, the government will repay you for it. So for a short-term thing, that's typically what you're going to be looking at. For a long-term thing, how you should invest, typically you're going to be looking at something having to do with the stock market. There are a variety of ways to get into the stock market, certainly a 401k plan, a Roth IRA, a regular traditional IRA. All would be good vehicles for that type of investing. If you're investing in a 401k plan, there will be a choice of mutual funds effectively that you can invest in. It's already predetermined in
They
most
never
401k
do
plans.
individual stocks
For most 401ks, 99%
just because
have
they're more
just mutual
volatile.
funds. Yeah, and most people can't pick individual stocks. Very few people really are good at picking individual
Hmm.
stocks. Professionals are often not good at picking individual stock. Um, so now when you get to money outside of an IRA or money in an IRA or a Roth IRA, the simple way to start is to find a mutual fund company.
What are examples of
Uh,
those?
Vanguard, Fidelity,
Oh,
companies like that. Find a mutual fund company. The simplest thing to do is buy an S&P 500 index fund,
mm.
okay, which is just going to give you stock market like
And this is
results.
not financial advice.
This is not financial advice, but that's a starting point for most people. That is advice I gave you a while back, if
I
you
remember.
remember.
I remember.
And you can set up an automatic deduction plan from your checking account, for example, that would take $100 a month and put it into a fund. You can probably do $50 a month. You can do $200 a month. So if you're going to do, a Roth IRA, for example, you can take the annual limit of what you can put into it and divide it by 12, and that would tell you how much you're allowed to put in it every month. And certainly you want to do as much as you can. For example, if you don't have a 401k plan, ideally you'd be doing it on your own in like a Roth IRA. Young people, Roth IRAs are generally better than traditional IRAs, even though you don't get a tax deduction for it. That's the really simplest version of it, is just to do something along those lines. and you will get long-term capital gains treatment if it's a taxable account, which just means you don't pay as much in income taxes on the gains. It can be very, very simple and easy to do and automatic, which a
Mm.
lot of people need.
Yeah, I love that. So I think this is really helpful. It really depends on your goals, your timeline. If you need to take the money out, you mentioned the word liquid. That's your ability to be able to like remove that money ASAP, Rocky, versus, you know, well, how do we say it? Long term.
Or non-marketable, or we have a variety of phrases we could use for it. Long-term money, you're typically not just going to dip into all the time for various things, because you could be dipping into it when the market's down, and the worst possible time to take money out of the market is when the
Mm.
market's down.
Got it. So that is where should I start investing? How do I invest? Like, what do I even do? So make sure that you share this video with a friend who's maybe thinking about it, or, they've been journaling about it, typing it on Google, whatever they might be doing. Thanks so much, Dad.
You're very
Remember
welcome.
to like, subscribe, comment, and we will see you soon.